Hi guys, good evening. I hope that everyone had a really good Friday. The market certainly did have a really good week. I think we ran at more than 1,000 points this week. So roughly, we are roughly around 200 points away from my target. So hopefully, probably by around Tuesday or so, we might probably get towards 13,500 the way the market is moving. So hopefully, I would like to see that target being achieved. We have waited quite a while because the time that I said that it will get to that level was back in March of 2021. So been a while, and hopefully we can see it over the next week or so. So right, that being said, today we'll be looking at KZOO and Prime Lands. A lot of people requested these two counters, so I decided on looking into these two today. And on tomorrow's video or on Sunday's video, one of the two, I'll be looking into the tile sector. We have already covered RCL in one of my previous videos. So on Saturday or Sunday, I will post a video on one of the 2 days, and on that day we'll be looking at LWL and tile. So right, let's quickly jump into KZOO. So overall, what we simply do is we look at the overall chart, so we can clearly see that prices are in a very nice uptrend, all the way from the March lows all the way up till now. So we have seen periods of consolidation along the way. We have seen strong rallies and then a bit of consolidation, which is good, which is natural cycle of any stock. So that's something that you have to expect. So that being said, we know that the overall trend of the stock is favoring the buyers. Now we need to quickly look into the moving averages. So let's quickly look at the 20, 50 and the 200-day moving average. So like I always say, we look at trend alignment, at moving average alignment. So when I say alignment, that means that the 20 needs to be above the 50 and the 50 needs to be above the 200 to confirm that the moving averages are showing an uptrend. So as of now, we can clearly see that we have a strong uptrend. And one other pointer to note is that usually if the overall short-term trend is very strong, usually prices hold above this 20-day moving average. So as of now, we can clearly see that prices are holding above that level on usual pullbacks. So you can see a pullback over here, a bit of a pullback over here, and then two more pullbacks around this area as well. So you can clearly see that prices are finding support at that level. So another thing that we have seen is also that whenever prices do pull back to this level, we have seen a quick reversal. So if I'm to show you that on the chart, we can see that when we pull back over here on this day right here, we saw volume coming in, and then we saw this strong move up towards this 1450 level all the way from around 1120. So the same thing happened here as well. We saw a bit of a pullback towards the 20 moving average again, and then we saw a quick reversal. So likewise, that's exactly what you would want to see around this this pullback as well, that we want to see a quick reversal to the upside. Right, so now we know that the moving averages are also showing that the trend is favoring the buyers. Let's quickly look at a chart formation. So if you look at the overall chart, I don't know how many of you noticed this, but we have somewhat of a possible ascending triangle forming over here. So this is how it would look like. For those of you who are new to technical analysis, for those of you who don't know what an ascending triangle is, this is what it is. An ascending triangle has a horizontal resistance line, which means that it's a constant level of supply or level of resistance, and then you have an upward sloping trend line. That's why you call it an ascending triangle. So if you're new and if you don't know what a descending triangle is, it's a complete opposite. So there's a horizontal support level where the buyers are guarding it, and then you have a downward sloping trend line. That is why you call it a descending triangle. So usually descending triangles are bearish, and you would usually expect prices to break down to the downwards. And if the pattern is an ascending triangle, you would usually expect prices to break upwards. Now right, Now that we have looked at the overall chart formation and we know what our exact level of resistance is. So remember, I've always told you in the videos, a resistance or a support level is not an exact level most of the time. It's usually a range and not just an exact level. So it won't be like 14 rupees, but it can be anywhere between 13.50 to 14. So here as of now, our resistance, our confirmation line would be roughly around this 15.10 to 15.30 level. So that would roughly be our confirmation level. So 15.10 to 15.30, and this is the range that we need to break for us to confirm this pattern over here. So now we have seen that obviously prices are right near this level over here. So is this an entry point? So there are, I know some people who buy on these drops over here, because usually overall the pattern is bullish. So what you can expect is you can speculate that there will be an upside breakout. Now there are, like I said, there are people who buy it on these pullbacks, because every time prices do pull back, it pulls back to a lower level, it pulls back to a higher level than the previous low. So if this is the previous low over here, and then the next pullback does not come to this level but stops above that level, the same thing happens again on the next pullback. So you can see that the next pullback stopped above this level, and then the same thing happens over here, and then the same thing happens over here. So in that sense, I understand why some people like to buy it at these levels. So what they expect is then for prices to move and then eventually break up to the upside. So if you want to get in at these levels, then obviously you do have a justified risk level. Your risk level would be if prices close below this upward sloping trend line. So let me highlight this trend line for you. This trend line over here. So if prices close below this trend line on the daily chart, that would be a possible warning sign that most likely we might see a further pullback lower, probably towards this 1260 level or 1250 level, before prices round over and then break out to the upside. So that is one way to look at it. You can have your stop like that, or if you're a more conservative trader, what you can do is you can wait for prices to confirm the pattern. So we do not have confirmation until we see a breakout. So to confirm a breakout, there are two rules. There are three rules that I follow. So, but you can follow the two basic ones. One is that you need to have a close above resistance. This is one rule that you need to look at, and also volume needs to follow through. So what it simply means is that even if we have a close above 1530 rupees, that would not confirm a breakout until we see very heavy volume on the break as well. So the reason why we look at volume is because that shows that there is demand in the stock and that a lot of people have identified the breakout, and most likely we might see a further continuation on higher volume. So that is the reason why we use volume alongside price action when we look for a valid breakout. So right, so let's quickly, we have looked at one entry point. The next entry point is obviously if prices close below 1530. So in that sense, you can wait for the breakout and then enter the stock. So you are paying a premium. You're probably, if you're waiting for a 1530 break, then you're paying roughly another extra 1.8 rupees just to be on the safe side. So obviously everything comes with a risk. If you want to play it safe, then obviously you will most likely get in at a premium price. So as of now, if you are to get in at 1530, then your stop loss would be if prices come back into the pattern. So say that we have a breakout to the upside, and then again prices come back and it does not close above 1530, but it actually closes inside the pattern. So say below 15 rupees. In that sense, we might have a possible failed move, or we call it a fake out. So in that sense, again, that's another way for you to stop yourself out, or a signal for you to stop yourself out. So right, so let's quickly summarize everything that we have looked at. My bad, sorry, let's look at a price target before you sum things up. So price target, again, we look at the height of the pattern. So let's assume that the horizontal resistance is at 1510 and the lowest point of the pattern is at 10 rupees and 10 cents. So we roughly have a height of around 5 points, and we add it to, say, let's just assume that we add it to 1510, and we have roughly a price target of around 20 rupees over here. So this becomes your upside price target if we can see a breakout above 15 rupees. So let's quickly summarize everything. We know that the moving averages and the overall trend is favoring the buyers, so you need to align your positions in favor of the trend. If the trend is up, that means you need to be on the long side. And then we have looked at price target, which gives us a price target of roughly 20 rupees. We have identified 2 points. One, you can get in at these current levels and risk it if prices close below this upward sloping trend line, or the second form of entry is wait for confirmation and then have your stop if prices close back inside the pattern. So those are the two ways that you can enter it. Overall, as of now, we do not have a confirmed pattern because the pattern is confirmed only through a breakout. So in that sense, we still don't have proper confirmation. So that's about it on KZOO. If you have any questions, feel free to ask on the comment section and I'll be happy to reply. So right, let's quickly move into PLR. Right, okay, so here what we can see overall is that we can see this big pump over here on the IPO day. Prices went up all the way to 14 and then closed very low by the end of the day, and then we had a very large consolidation phase since start of June. So roughly for around 6+ months we have had a base. Now if you had been following me on Twitter, I have always said to people that every IPO, no matter whether it's good or bad, usually fails for the first 6 to 9 months. Usually what IPOs do is they form a base over 6 to 9 months before it starts moving, and usually it's only the good ones. So if it's a bad one, most of these IPO, if it's a bad IPO, usually it just falls apart and it just keeps falling forever. But if it's a good IPO, you would see something like Prime Lens, where prices eventually come down lower, form a nice base, and then look to break out over the next or after around 6 to 9 months. So as of now, we are past that 6-month range. So now we should look obviously to see if Prime Lens can look to break out to the upside. So as of now, what you can clearly see here is possible rounded base. We can see a nice rounded base over here for 6 months. But also, if you had noticed, we can even see a possible cup and handle forming. So we can see the cup formation has already formed over here. So we can call this the cup, and then the handle is still forming. So what I expect is something like this to happen, where I expect, so we have a support level at around this 1230 ish level. So this is where prices have found support today. Even though prices did break below it, the final close is above that support level, so therefore prices have held support. So the other thing that's favoring the buyers is obviously the volume. So you can see very heavy volume onto the upside, and you can see declining volume as prices pull back towards this 1330 support level, 1230 support level. So that is also another bullish scenario for the buyers. So in terms of a cup and handle, we are still yet to complete forming the handle of the formation. Once the handle is formed, then we have a proper cup and handle. Again, it's not confirmed until we see a breakout. So how do we look at a breakout from a cup and handle? So simply we need to see a breakout above this trend line over here, which is also called the neckline. So if the neckline gets broken, so we say that we see something like this happen over here, where prices consolidate again for a bit of time like this over here, and then we see a very strong breakout probably over the next month or so. So that is what we need to see. We need to see the handle formation start forming. By the looks of it, as of now, looking at the overall chart, looks like 1230 is a good entry. But that being said, again, you should not be doing what I'm saying. Do what is comfortable for you. If you feel like it might dip a bit lower, then obviously follow your gut and just wait till you get wait until prices come to your preferred level. So that being said, again, there's no guarantee that it will, it might never hold this support and it might come lower, or it might hold this support and we might see something like this happen, and then an eventual breakout over the next month or so. So like that, there is no guarantee in technical analysis. We are just making assumptions, and we need to obviously figure out what the best assumption is. So as of now, this 1230 level seems to be an good entry point. If you look at the volume as well, it is also showing signs that people aren't willing to sell the stock anymore, and that most likely buyers would start to come in around this 1230 12 rupee level. And also we have a possible cup and handle forming, where we are yet to see the handle formation start forming. So until that, we do not have a confirmed pattern, but it looks like we might have one. So let's quickly look at the moving averages just to see the overall trend. So as of now, we do not have the 200-day moving average because we do not have data for 200 days, but we do have the 20 and the 50, which is well aligned. We can see the 20 is above the 50. If you are in this scenario, what you can do is you can even replace this 200 with possibly a 10 moving average, and you can see that the 10 moving average is where prices are finding support as well. So right, so we know that the moving averages are aligned. We know that there's a possible cup and handle forming. Remember, possible because I can't exactly assume that we have one forming until it properly forms, but as of now, we are making an assumption that we might see one forming over the next month or so. So it's just the handle part which is yet to form. Once that is done, we are waiting for this breakout above the neckline to confirm the cup and handle formation. So how do we measure a price target? So again, the same thing, we pretty much take the height of the pattern. So over here we take the lowest point, which is roughly around this level. Let's just assume that it's at around 9 rupees and not go lower, not go too much low. So assuming that it's around 9 rupees, and then our neckline, the corresponding highest point towards the neckline is roughly at around 1450, and we get a height of roughly around 5.5 points. And then assuming that we do have a cup and handle, and we see this handle formation complete as well, and assuming that the prices break out roughly around this 14 to 1430 level, we get a price target of roughly around 19 to 20 rupees. So roughly around this range over here, around this 19 to 20 level is our price target from a possible cup and handle. So price target from a possible cup and handle. So right, so we have looked at the price target, and let's quickly look at a stop level as well, or a risk level. So if you're willing to get in at these levels, then my stop would be if prices close below this key support level at 1230. So if prices close below that level, I would probably stop myself out and wait for a further pullback to decide whether I am willing to get in or not. So if we can't hold this 1230 level, then most likely the next level of support would be roughly around this 1080 level. So that is roughly where the next level of support would be. So hopefully what ideally you would want to see is prices hold above this 1230 level, and then form the handle formation on the chart. So right, okay, so that's one stop level that you can have if you're looking to enter now. And if you're a conservative trader, and if you want to wait till prices break out to the upside, then obviously once we see a close above this neckline, your stop level would obviously go if prices close back below this neckline. So that's one way of stopping yourself out. So one stop level. Another stop level would be if prices break out above the neckline, and eventually prices close back below the neckline. So probably it sounds a bit confusing, but what I'm simply trying to say is that if prices close above this neckline, that means we have a confirmed breakout. However, there are times when eventually prices quickly reverse back inside the pattern and close back below the neckline as well. In that case, what we call that is a possible fake out. So in that sense, again, that's a level for you to stop yourself out and wait for further confirmation in prices before you look to get in again. So I guess we have highlighted everything on prime lands as well. We have looked at the price target, we have looked at the trend, we have looked at possible entries and stop levels. Right, so that's about it. So we have looked at KZOO and prime lands. So that sums up the video for today. If you guys have any questions, obviously don't fail to mention it in the comment section. I'll be happy to answer your questions. And most importantly, if you like the video and if you find these videos helpful, please make sure to watch the entire video and watch the other videos if you haven't watched them yet. Make sure to leave a like and most importantly, make sure to stay subscribed so that you are notified when I post another video in the coming days. So thank you guys, thank you for watching the video, and most importantly, have yourself a really good weekend. Thank you guys and stay safe.